It's Wednesday, 3:50 p.m. and realize that the volume sucks, so I'm going to try to scream here a little bit louder than I typically talk so that you don't have to get microphone or headset to be able to hear what the heck I'm saying. I think I got a solution. It might just be a little while till I get it all figured out. So hopefully in this more broadcast voice, just know that I am doing this weird voice. So the next one that we're going to look at is Berkshire Hathaway, I think it is. The Warren Buffett. I'm not sure if this is an ETF. It's some type of amalgamation of different stocks throughout the market. I know that I think I was listening to Warren Buffett talk to an interviewer a week ago, and I think that they said that they own 5% of Apple, like in total. So I know that that's a decent component of what Berkshire Hathaway represents. So yeah, it's I think it's you're basically following their investments with this particular ticker. And yeah, listening to Warren talks, he usually thinks about buying stocks as buying businesses. That's what he equivocates it to. So when you're buying a stock, you should just think of it in terms of buying that business, and the business that you're buying, you want to have value to it. So if you believe in certain things, that's where it's a good place to put your money. And that kind of brings up a point I can highlight, that you don't want to go off other people's rationale. You don't want to make trades off of, let's say, what I'm saying right now, because let's say when the dilemma comes in the future, when the markets react differently than what you initially foreseen, then that's when you're going to go back to that emotional reason that you actually, or you won't have any support mentally, internally, to rationalize your previous decision. So you'll get fearful and you'll sell out at the slightest uncertainty that will come. It's just a matter of when. So that's where it's good to listen to other people's perspective, and I think it's really valuable to learn everything you possibly can when you're investing your money. It's just it's dangerous to just go off of others' opinions because of what I just mentioned there. You don't have any internal rationale that's backing it up. So when things become uncertain, like that's when you're going to really have a lot of fear, and rightfully so. You should, because you made a decision not off your own mental horsepower. You piggybacked on someone else's decision, and now you're basically just hoping for the best. So I'll move on from that point, and let's say we got Berkshire Hathaway on a monthly time frame here, and I've got this set up for a 55 moving average. It's been similar to some of the other stocks that we've looked at. It's got an overall uptrend. You can say that overall it trends upward, which means that, yeah, it hasn't went belly up. You can just draw a line like this and say, yeah, we got a good support on the bottom. It's clearly going upward, and you could draw something from the top aspect, and yeah, I'm okay with that. But you could expect movement or price action within this trajectory in the future. That'd be a good little thing. It's pretty much the same as drawing these parallel channels. I mean, it's just a different way to do the same kind of thing, I guess. If you want to draw two lines, or just use the parallel channel and then bring it up like this. So you can see it's a little different. There's a little different trajectory here. With the parallel channel, it's going to be a little bit more modest in terms of gains, but it's pretty similar. So this might be a little bit wide, but it might just be how I drew those trend lines. So yeah, we got a good overall positive trend to the upside. I'm just going to delete some of these to get them out of our way. And historically speaking, we got the monthly sense, so we can look at everything from 23 years in the previous history. So we got a couple corrections overall within its history over the last 20 years. These two look like the biggest ones, drop in the stock, and it looks like it's the dot-com bubble and then the crash of the housing market in 2008. So I'm just going to see what kind of percentages these lose. We dropped about 50%, 2001, and in 2008, about 50%. So this is actually really good. I mean, these drops on a monthly time frame, like I think the last one we did, it was Amazon. We've seen a 95% decrease in the .com kind of bubble right there. So with this, it seems to not be as volatile, meaning that it doesn't have as many wicks up and down, and that can be more of a reassuring position to go into. And usually anything that's an amalgamation of multiple resources is always going to be less volatile because it's averaged out over many different companies. So yeah, it's kind of a better way to minimize risk. And if you're not looking for 2, 3, 4x in your gains, then yeah, you want to put it somewhere with a slow, steady increase. And Berkshire Hathaway looks like a relatively good option here. So on the monthly sense, you can see it respects this quite well. Here's a time of uncertainty here, 2012, but it got caught up and supported here. So on this longer time frame, let's just keep consistent. Let's look at the 13 moving average, and yeah, you can see it respects it a little bit more, kind of hugs it. Not sure if I like this beautifully, but it can give you a little bit more of a sign that there might be adversity to come. I'm just going to keep it at the 55 though for now, because it looks like it's pretty clear and concise that once it breaks down and finishes below, like granted that is pretty darn close to being finishing below the trend, like here would be a clear indication right there that hey, this is broken. I mean, these wicks to the downside too, with that kind of extreme wick, that'd be pretty nervous for me. I'd be almost waiting for it to come back up and to sell it. I mean, looking at the momentum, you can see that it's been pretty gradual, the decreases most of the time, and we had a little bit bigger rise, so that just means we got a bigger way to go down. And you can see here, typically it would flatten out a little bit more. So you can see it dropped down a little bit sharper, which might have been an indication that hey, this is dropping. This momentum is dropping a little bit more than typical, and then you could have to align that with the deeper global economy, or let's say North American economy, and knew that the housing market was a pile of trash. So you can see right about here, we can clearly see, hey, looks like that momentum shifting. We got one good ticker up here. Looks like we're gonna get back here, and you can see that it served as resistance, pretty good resistance for a few months here. It had a real tough time breaking it, and then boom, we broke it. That could be almost a confidence thing, and say right here, we just got our first, oh, it's even before, our first move to the upside, and then we got that reconfirmation, and yeah, it was smooth sailing for another few months. We got some good value, and then kind of lost the momentum, but you can see here, that might have been fearful too, a fearful time to see, hey, is this going to continue on? It didn't make a higher high, it made a lower high, but also we can use these higher lows as a good outcome. So you don't want to get too focused on any one indicator because it will lead you astray. You don't want to get overconfident in what these things are saying, but right in here, you can look at these as buy points too, like we've kind of said. This might be the best time. Hey, we got a Black Friday sale. Come by. This is the only time you're going to get it respecting this kind of trend line at these prices for maybe a decade. So you can look at those as good potential buy zones. And yeah, I would always wait for the momentum to start rounding, and even then, it could just continue on to the downside. So that's where I mean, if you want to really be safe, let's say that you're going to enter in right here. Let's say you're going to enter in this little zone right there. You might want to be cautious and modest with yourself and say, hey, I'm not letting it go below this former wick. I'm not letting it hit a previous low. I mean, you could even say something like that if you wanted to shorten it up. And that might save you from a potential continuation of the downtrend. You never really know how far it might correct. So you got to just kind of set up a backup plan anytime you enter into something. But in these moments, you have a good risk to reward. I mean, especially when you zoom out and look at the historical trend, it typically goes up. It's just a matter of how long is it going to go down before it continues to go up. I mean, so if you bought right here at $95 in 2007, and then all of a sudden seen it go down to 44, you just lost half your value in Berkshire Hathaway, and all of a sudden it pumps up here again, comes about $80, and now you're like, well, is this rounding? Is this going to just continue on, let's say, to the downside instead of having a rebound? So how do you know it's not going to just continue on to the downside here? Well, that's where no one can really foresee the future. But that's where sometimes the fundamentals can give you that reassurance that you are in a good stock. There's not a lot of reason that it is going to go down. And another good thing is looking at this momentum down here. These ones don't really tell you as much as this in some regard. Like, this is good for knowing like exactly when momentum is shifting in a bigger time frame. But these ones I like looking at these. I like looking at the MACD, and you'll realize I like to use the same expressions. I mean, you can think of these as cliffs here and saying like, hey, this might be time to take some profit. And all the same too, like, I mean, it's just tough to buy in at these highs, especially when you see it get an all-time high and you see it at a momentum or at a buy at an all-time high. It's just like, it makes me pretty nervous. I mean, I'm an overthinker, so I'm much more at peace of mind when you can buy stuff in this lower side, especially with good fundamentals. And that's just where to be able to have the guts to do that, you're gonna have to that's what you're gonna have to implement. You're gonna have to be greedy, not greedy in the sense of getting a second finance on your mortgage and investing it into a stock with the hopes and dreams that you're gonna make a lot of profit. I mean, I would say to that idea, the next one, pigs get slaughtered. So anytime that you invest more money than you're willing to lose, or money that you need for rent this month, or money that's set away for your kids' education, or money that you've deemed necessary for some other important task in your life, that's not stuff that you want to gamble with. I mean, stocks are investments, and investments are not necessarily gambling, but in some sense, I mean, this money is money that you might lock away for a long period of time. I mean, when you're looking at these trends, I mean, if you bought here, it would have took, if you bought here and then it went down, it would have took, let's say, 1,800 days. It's a while, man. That's a while. It's almost 7 years. It almost took 7 years just to get back to your initial investment. I mean, and if you held after the fact, then yeah, you could have made a lot of profit, right? But who's willing to lock in their money for 7 years when everyone's living paycheck to paycheck and credit card payment to credit card payment? So you got to keep that in mind when you're doing this investment, and you don't want to ever invest more than you're willing to lose at the time. And not just that, I mean, it's not that you want to be losing this money. It's just like, it might just have to be locked up if the market goes away from the general way that you're expecting it. And that's sometimes a lot of the difficulty or the danger at buying at an all-time high right here. Like, that's at an all-time high. I mean, you buy low, sell high, right? I mean, but at the same time, every emotion will tell you otherwise. You'll see it going up. You'll see it going up, and you'll get a feeling. What's the feeling? It's always said like that. You'll get a feeling of FOMO, a fear of missing out. And then you'll be like, oh, you hear Apple's doing good. Look at it. Look at it. The last 1, 2, 3, 4, 5 months in the green. It's going to the moon. We're all gonna be rich. You hear people talking about their stocks, about their profit that they've got, they're up 20% or whatever in the last few months, and you're like, well, I'm missing out on all this opportunity. I'm gonna buy in. I'm gonna buy in right now before I miss this opportunity. And likely when you get that feeling, you're gonna just be getting sold to by all the people that bought low right here. All the people that bought right here are just waiting for this opportunity, because these aren't idiots that buy and sell every day. They're smart people, and they got more money than me and you, and they have that for a reason. So you want to really regulate those emotions, especially the fear of missing out. Making investments out of desperation will put you in this category. Will make you a pig. And buy low, sell high is this. Everyone knows it, but no one does it. I mean, I've made that stupid mistake myself, and sometimes experience is the only way that you're gonna learn. I mean, experience, if you choose to learn from it, is the only way sometimes that you're really going to understand how these things work, and internally, because it's an internal feeling that you can't necessarily verbalize to everyone. But if you can learn from someone else's downfall or their experience, you are considered a wise man, and a fool has to experience the failure himself. And I've been a fool in a lot of my life, but at least I actively try to learn and keep learning and try to be better. And through all those foolish activities, I've learned to become a little bit more wise and keep my eyes and ears open and try to learn from everyone and everything, and just keep on collecting data, because that just increases my data bank that I can cross-reference information, both new and old, and I can make better informed decisions. And the most priceless thing on this world is wisdom. Um, and wisdom's hard to come by. And if you're not seeking it, you will not find it. Not one smidge. You will not be one little tiny inkling more wise, because your ignorance and arrogance will rule the day. So I just went on a rant there, but that's what provides some entertainment, I guess, from the dry stock analysis. But you can see this on this monthly sense, this low opportunity. I mean, that's when everyone's going to be fearful, because just think, if you lost half your value, do you want to buy something that just lost half its value? I mean, there's another phrase that comes into my mind. I mean, don't catch a falling knife. So when it's coming down like this, I mean, you could have said, oh, right here, I want to buy. It's below this trend line. It works in the past. It worked one, twice. Worked here historically. I'm selling my car and I'm putting it in. And then it comes up, you think you're a good decision maker, and it changes its mind. It's gonna have to go down a little further. So you would have been okay if you could wait out that long period, but you can see it's good to wait. Wait, don't try to catch this stuff like when it's not completely rounded and starting to come back up. And even then, if you wait till it rounds, and if you wait till the momentum shifts, and you can start seeing a positive upswing in the whole stock that you're invested. I mean, it's not guaranteed that it won't just keep on. It won't just be a kind of fake out or dead cat bounce and continue on to the downside. So that's where all these indicators come in. And even if you're gonna, let's say, use this golden crossover right here, you probably would want to set like you would want to set some backup plan and say, hey, if I'm gonna buy in at this zone right here, I'm not gonna really let it get. I mean, if you want it to be super loose, you could say I'm not letting it go back below 40, because you can almost guarantee it would go lower. You'd lose a huge percentage if you kept that. So anything that gave a signal, I mean, you can make your own choices in there. But if you're gonna buy in on these wicks here, you probably want to set some type of stop loss too. Like, you don't want to just say I'm buying and I'm holding forever because it dropped below the trend line, and that means it's gonna go up for sure 100%. That's not the case ever. So you want to make backup plans and always protect your wealth. And yeah, if you listen to people talk on YouTube about these stocks, you basically hear them talk in a circle about one way, and then talk in the counterclockwise circle the other way. And then after it's all said and done, they don't even know. A lot of times, I mean, you don't have any greater sense of what you should do, so you make multiple plans. You try to keep calm and in a good state of mind when you're doing it, and you prepare for every situation. You prepare for the worst, you prepare for the best, and you don't want to dwell on those preparations. You want to set the plans and forget about them. You make a concrete plan and you forget about it. Well, how are you gonna get? I mean, that's where alerts come in well, but you don't want to just be waking up thinking about what's my Berkshire Hathaway doing today. Is it going up? Is it going down? I mean, if you're day trading, that's a different story. I mean, but you have to realize there's a lot of adrenaline that comes into day trading. It's like gambling. I mean, when I was doing a little bit more trading in a shorter time frame, I mean, it reminded me a lot of being at the casino or playing poker in a high hand where it's like, oh, I'm waiting for the turn in the river. Hopefully, a two of spades doesn't come, and yeah, I mean, it keeps you on edge all the time too. So I think that's just not healthy for most of us. So you want to make plans for every possible situation and take a step back and let your mental hard work bear its fruit. Um, so I'm just gonna get out of that sense here because I'm talking a lot of the internal aspect of trading, and I'll be humble enough to say that I haven't mastered it myself, but I know where I need to work on, and I think it would be valuable for everyone else too to work on that. I think it's just being naive if you don't emphasize the importance of something like that. So let's look at this at a shorter time frame so we can see like it's been up here, it's coming down, the momentum's coming down, but it's almost staying flat. I mean, you could say that this one itself, there might be a little bit more of something I can say here, but we can see that trend is going up and this trend is going down, and same with this momentum, it's overall going down over this time frame from, let's just say we do say from this point forward. So from here, this is going down overall. This is going slightly up. I mean, it's not as big as what could happen, but when this is happening right here, this is like this is more of a sneaky indicator. It's not so straightforward, but when momentum and the MACD So I'm just gonna make it so it stays on the darn screen when I say this. Okay, there we go. So what do you call this? When the MACD and momentum are going in the reverse direction of the price action, it would be called either bearish or bullish divergence. So when the price is going up but the momentum is shifting down, this could be a real predictor of the future. I mean, this indicator is typically bearish when you see that happen. When you see the price going up but the MACD going down, it's kind of signaling that the trend might be switching here, and it has this cliff. I mean, just we'll see how that plays out, but yeah, it's a little bit more of a complicated indicator, but it's definitely worth mentioning, and sometimes it can give you a real good prediction of what might be coming when other indicators are not helping you at all. So I'll just leave that up here right now. I mean, you can always look up these terms too, it's always good. I mean, it's all this different terminology when you're looking at stocks. It's just like any new profession. We ostracize the general public by creating our own language, so that's just another barrier to entry. And then, well, that's how we make a living in businesses too. I mean, we have information that others need, and we run businesses like that. So I'll be doing my best to try to unveil all these words and see how they actually apply meaning. So gonna go on the weekly time frame here and just zoom it up and see where we're at. So we can see here in 2018, this was kind of a high point. We can see the cliff. We can see the downward action. We see it did go to the downside. Kind of got caught by this support line. Came back up. Kind of had another crossover. We had a little bit more of a downfall. We got caught up here again. And you can see that it's kind of like, you can think of this as like potential energy too. Like it kind of had an amp up, and now it's just like almost like a ball bouncing. Like it bounces, it gets a little lower, gets a little lower, gets a little lower, and then from this point it almost got thrown back down. You know, I mean, or it got a little bit of inspiration here, I have to admit, because it reached all-time highs, and to reach all-time highs, I mean, you either have to have like some type of, you know, you have to have something that reaches that. So yeah, we reached an all-time high here. And now we had a down candle right there, but it seems like it's caught up. So looking at just these low points, I'm not going to do them all, but just to give you a general sense, we are attaining higher lows. So that's always a great sign. And that's where you could put like a little bit of an alert, or let's say we wouldn't want to really see it past 195 here in Hathaway, because then that's going to be kind of signaling a lower low. So in combination with some of this other stuff, like the bearish divergence here, of how this is, we can do this on a smaller time frame. And I'll bring this up a little bit more, but one indicator at a time. So yeah, it's going up, and you can clearly see that this has a downtrend. Same thing here. It's not as pretty, but it's going down overall if you drew it from the tops here. Like that. So we'll see. I mean, this could definitely, well, it already kind of had a downtrend, so you could have maybe foreseen that right here. You could probably would have guessed that if you were being a little bit more active on these trades, you could be like, oh man, look at this. Look what's happening. This is going up. This is going down. Whew. And look what happened. It did have a move to the downside. I mean, Berkshire Hathaway historically hasn't lost that much, like 50% and it's worse. So 14% seems like probably a lot in this stock, but yeah, you're probably going to be fine for holding. I can say I don't really like how sharp that decline is here in the MACD, and like right here too, but we know why, because that's the whole scare within the whole market. So it's going to move into the daily frame and see how this stuff looks at a little bit more of a short time frame. So some of these lines stay that you draw, and it's nice when they're actually applicable on the shorter time frames as well as the larger ones. And sometimes you might realize the error you made looking at a bigger time frame. So 224 to 230, I mean, that's not a very high or high. And like we kind of said, is that, what is that count? Just kind of analysis, you know, just kind of thinking in my head, but on this time frame, let's see if we can do it in the reverse fashion. So let's say that we take a little bit of a trend here. Granted that this holds, I mean, you can say that the overall sentiment is becoming more and more bullish in this sense. This won't work. That's way too big of a time frame. You can try to do these on different types of time frames. So this is me just not really planning. I guess I've never planned anything. I'm just going all off the top of my head with all this stuff. But you could say that that's trending downward here in respect to that, and that's going upward. So that creates kind of a situation. I'm just disregard that. That's not very good information. But we can see here on a daily sense, we've already hit a bottom with momentum, and it's starting to come back up. And same thing with right here. So the worst has probably already happened, unless it's going to be a bigger correction here. And to save yourself from that, you can just use something like this to prevent a further turn to the downturn. And the ways that you could also add in this other stuff, like, is this already played out an ABC correction path, and it's just going to continue up. So yeah, it's always good to have these fallbacks. Spread here, 200, 217. So I think that's a pretty good point. Maybe you want to set it a little bit more modest, like 195, or maybe you want to go 194.77, just so they don't get you in a freaking wick and then it shoots back up if you set in like that trading order. But yeah, overall, it seems like a pretty good, like it's probably the best one that it's had the least amount of downturns. And when I'm saying that, like, historically in the worst times when it went down in 2008 and 2001, it was only 50%. So seeing that, I mean, it's a little bit more of a calm one. So yeah, I mean, 18% here, it's pretty much going along what it does historically. It drops about 15-20%, continues on, drops 15-20%, continues on. And then in the worst cases with the full stock market correction, this thing drops about 50%. So it's probably one of the safest stocks that we've went through so far. So in general, I do like Berkshire here. It's actually pretty good. It's got me interested a little bit, but right here, yeah, we could say that we are at a kind of high here. I wouldn't sell it depends where you bought in, but let's say that I wanted to be a brand new investor. I would probably wait, because it is pretty high. It is pretty close to its all-time high. It's kind of in a decision-making mode here. It's just tough for me to buy into this stuff when it's already so high. And looking at some of these potential things, I would definitely like to pick this stock up if it gets closer to this white line. If it in the future kind of goes towards these prices, like, well, 180 or something, like, yeah, I'm definitely going to be looking at maybe adding this to the portfolio, as it's a really stable stock and it's not going to just lose all its value overnight. So those are always nice to have in the portfolio. So we'll see what this happens. We'll see what happens in the future. Time will tell if that actually is going to have a little bit of a bearish divergence. But I would say, unless you bought in right here, I mean, it always sucks to sell for a loss, but depends on the time frame that you want to hold it. So overall, a really good stock, really good fundamentals. Warren's still active in the news cycle, the media. I mean, he has to be somewhat responsible, and he's more than most. Like, he's buying at these low points. He's accumulating percentages of these businesses, these multi-billion, trillion-dollar businesses. Well, not multi-trillion, but trillion-dollar businesses. And yeah, he's obviously made a lot of money, so that's how he's done it. Just simple fundamentals, no emotion, and executing. All right. That's what we'll call a day. We got to get to work here. All right, talk to you later.